Can you see it now?
Yep.
Yeah. So, yeah, tell me now. Purchase goods on account $10,000.
Yeah.
Which two items affected?
Bank and no, sorry. Trade payable.
Yes,
Yeah.
trade payable
and purchase.
Trade payable and purchase. Good. And their category, tell me.
Okay, so trade payable is liability
Trade
and
payable is a
purchase
liability.
asset.
And purchase is what?
Asset.
Are you sure?
Yeah, I think so.
Purchase is not asset.
Oh.
We are not buying goods for our own use.
Oh, right. So it's sales. I mean, sorry. Revenue. Sorry.
How come it is revenue?
Because we're gonna earn something out of it. So
that we will do later on. Right now we purchase, it is expense.
okay.
Right?
Yep.
Don't forget, okay? So trade payable is a liability, purchase is expense. So liability increasing or decreasing?
Liabilities increasing, expense.
Increase in liability, credit. Expense also increasing, increase in expense, debit. Right? So 2022 March 1st. So entry will be, first I will record debit item. Purchase account debit. In the next line, trade payable. Okay, the amount is 10,000. Did you get the recording of previous class?
Yeah.
I have shared the link only, and that video is private now. Like it is not available publicly.
Okay.
People, those who are like, if you log in using your email ID, then only you are able to watch that video.
Yeah.
Okay, it is private now. So narration is now what? What is narration? Goods
A small description.
purchased. Goods purchased on account. Right? Now, after this, see what happened. March 2nd. This is new transaction I am doing now. March 2nd, see goods returned to the supplier. $2,000. We brought goods costing 10,000, but out of 10,000 we returned goods costing 2,000 to the supplier due to some reason. Okay, that goods was not up to the mark, so I have returned those goods. Some of the goods I have returned. And what is the value of goods returned?
2,000.
Yeah, tell me which two accounts affected.
Wait, was this through cash or is it on account?
No, how, where cash is nowhere mentioned, no?
Okay, so trade receivable.
How we are receivable? We are not selling goods. Trade receivable will come only when we sell goods.
Oh, okay. So so purchase and returned.
First we brought goods. Now to the same person I have returned the goods.
Yeah. So trade payable.
Trade payable, and next is goods, na?
Yeah. So but we don't
trade
write
payable is a liability.
Yeah.
In place of goods, I will write purchase return.
Yeah.
I will not write goods. I will write purchase return. Understood?
Yeah.
This is the another nickname. Trade payable is a liability and purchase return. When I brought goods, which name I have used? Purchase. Now I am returning goods, so purchase return. This is goods account only, representing to the goods only.
Yeah.
Purchase return is which category? Actually expense only. Okay. Understood? Purchase and purchase return same category. Purchase is expense, so purchase return is also expense.
Yeah.
But it is decreasing this time.
Yeah.
Liability, what happened? Tell me.
Liability decreased.
Decreasing, na?
Yeah. So it's gonna
There
be
I brought, so liability increase. Now I am returning. So in future, I have to pay only $8,000.
Yeah.
Okay, so liability decreased by 2,000. So decrease in liability, debit. And expense increasing or decreasing?
Expense is decreasing.
Expense decreasing now.
Yeah.
When I purchased, expense increased. Now I am returning, so expense will decrease. Decrease in expense, what? Credit.
Right.
Agree?
Yeah.
Yeah. So now let's see the recording. March 2nd. So debit is trade payable first. So trade payable account debit, and the credit item is purchase return. Purchase return account. How much money? 2,000. Now tell me how much money I owe to the supplier after this return.
8,000. Yeah.
How much money I owe to that supplier?
8,000.
8,000. Good. Now that 8,000 I have to pay. Now I am paying on March 5th. Paid dollar 8,000 to the supplier. Tell me which two accounts affected.
Bank and
Bank
sorry. It's trade payable. Yeah, bank and trade pay.
Are you sure? There is no check written.
Yeah, but then isn't the liability decreasing? So
The liability will decrease.
Yeah.
When there is no check, so it is cash only. So first account is trade payable, another account is cash.
Oh,
The
okay.
trade payable is a liability, cash is asset, right?
Yep.
I hope understood this.
Yep.
Yeah. Now tell me, liability increasing or decreasing?
Liability is decreasing.
Decrease in liability, debit, right? And the cash is increasing or decreasing?
Cash is decreasing.
Decreasing in asset, credit, right?
Credit. Yeah.
So see on March 5th. So first I will record debit item. Debit item is which one? Trade payable. So trade payable account debit, and cash is the credit item to cash.
Yeah.
How much money? How much money did I pay? $8,000, right?
8,000. Yeah.
Okay, narration I will write paid to the supplier. Agree? So understood this written part.
Yep.
All three transactions are interrelated. They are not isolated one. First I brought goods 10,000, then I returned goods 2,000. So of course I have to pay only 8,000, and that 8,000 I am paying to that supplier. Okay.
Yeah.
Now let me give three transactions. You have to solve that in your notebook. Ready?
Yep.
Suppose March 6. Sold goods on account. $3,000. Next, March 7.
You kind of lagged in the middle. You froze, so I couldn't hear you.
Can you hear me now?
Yeah, I can hear you now. What am I supposed to do?
Yeah, you have to solve it in your notebook, these transactions.
Oh, okay.
In your notebook, you will draw this format of journal, and then you are supposed to pass journal entries. So goods returned by the customer. Is it your system? It's popping some messages, I guess.
Yeah, I'm getting notifications from
Can you please turn off that?
Yeah, okay.
Goods returned by the customers, $500. Next.
Sorry, I don't know how to mute these notifications.
I received check from the customer. for the balance amount. Okay, do it. 5 minutes given. Which two items affected in the first transaction?
So basically it's gonna be sales and trade receivable.
Yes, sales and trade receivable. Category?
Sales is asset.
Mm-hmm.
And then, oh wait, sorry, sales, isn't it revenue though?
Yes, sales is revenue.
Sales is revenue and trade receivable is asset.
Yeah. Which is increasing, which is decreasing?
Revenue is increasing, asset is also increasing.
Both are increasing. Increase in revenue, credit. Increase in asset, debit. Right?
Yes. Yeah.
So do the journal entry. What will be the journal entry?
So I'm gonna first write the date. So it's
First in date column, write the year. Date is March 6, right?
Yeah. And then I'm gonna write the debit first. So it's gonna be trade receivable.
Yes, trade receivable.
Yeah.
Account debit, how much money? 3,000?
3,000.
And in the next line, leave some space. Sales account. How much? 3,000.
Yeah.
Okay. Now narration, what narration you will write?
Sold good.
Sold
Sold
goods on account.
on account.
Understood?
Yeah.
Now do it the next transaction. Next two transactions.
Yeah. So for the second one, it's gonna be trade receivable and sales again, but then it's gonna be the opposite, basically.
Trade receivable, and which is the next account?
Sales, right?
No, not we are returning now.
So sales return. Sales return. Yeah.
Okay, now category tell me.
Trade receivable is asset and sale return is liability.
No.
Is it okay? Wait. Sale return is expense, and then
Sales return is expense.
yeah, right? Because you need to pay them.
No. First I sold, so sale was revenue now.
Yeah.
So it is revenue only.
Oh, okay.
It is asset, and this one is revenue. Agree?
Yeah.
So asset increasing or decreasing?
Decrease. No, wait. Trade receiver. So, yeah, decreasing.
Asset decreasing? Yes, correct. Decrease in asset.
Credit.
And revenue increasing or decreasing?
Revenue is decreasing as well. Sorry.
A decrease in revenue, debit. Agree?
Yep.
Sale is revenue, so sale return is also revenue.
Yeah.
So now, what will be the journal entry? Do it.
Okay, doing it.
So first I have to record debit item.
Yes, it's gonna be sale return.
Yeah, write down.
Yeah.
So it will be sales return, right?
Yep.
Sales return account debit, and leave some space, trade receivable.
Yeah.
Okay, narration, amount is how much? 500, right?
500. Yeah, and then the narration will be goods returned by customers.
Yeah, goods returned by the customer. Understood? Now do the next one. This is March 7. Now we received this time what we received. Tell me. March 5. Sorry, March 7. This will be March 10. Let me write.
Yeah, we received a check from
Check. So which two items affected?
Bank and trade receivable. Yeah.
Bank and trade receivable.
Yeah.
Are you sure?
Yeah. I think so.
Tell.
Sorry?
Bank and
Trade receivable.
Okay, decide their category and tell me which will be debited, which will be credited.
Okay, so bank is an asset.
Mm-hmm.
So yeah, bank is an asset, and trade receivable is revenue. Yeah, revenue. So in this case, both are increasing. So it's gonna be bank is gonna be debit and trade receivable is gonna be credit.
Both are increasing. How come?
Because bank you're getting more money, so it's
So
increasing.
bank will increase in asset. Both are asset, right?
Oh, oh, both are asset. Okay,
Both
then
are
trade
asset.
receivable will decrease. Yeah.
It is
So
increasing
it's gonna
in asset and trade
debit.
receivable decrease now because the person has paid us the money.
Yes.
So trade receivable will decrease. Okay, so what will be the journal entry?
It's gonna be
Bank account debit.
bank account debit,
Leave some space and trade receivable.
and then the amount is gonna be 2,500, right?
How did you get that money?
Because it says balance amount, so the total good, right, sold, and then
Balance is how
because
much?
they did,
2,500, right?
yeah, 2,500.
Understood?
Mm-hmm.
Any doubt?
No, can you like I'm copying it right now. Just a
Yeah.
second.
Done.
Just a second. I'm on the last. Yeah. Okay. Done.
Okay. So understood. Today new topic is what? Return. Return thing
Yes.
understood. Agree?
Yep.
Whenever goods are returned, when we buy goods and return, then purchase return we will use. When we sell goods and then returned by the customer, we will use sales return.
Mm-hmm.
Understood?
Yep.
So now, so these basics entries we have learned. Now I will explain you ledger posting. After journal, what we do, we post these all transactions. We transfer this transaction from journal to ledger. Okay.
Yep.
First book is known as what? Journal.
First,
After journal, what
yeah.
is the next stage? Ledger.
Yes.
So in ledger, what we do, whatever transactions we have recorded in journal, that we transfer where? Where?
Into the
Ledger. And the transfer process is known as what? Posting.
posting.
The transfer process is known as what? Posting.
Posting.
Okay.
Yeah.
So ledger we will do on daily basis and ledger posting we do on weekly basis. Usually business people what they do, they will record transaction daily every day, but ledger posting they will do weekly basis. But nowadays,
Yeah.
so people are using softwares, computers, isn't it? So the
Mm-hmm.
moment you record transaction in journal, automatically ledger posting is done.
Yeah.
Okay, nowadays advanced systems are there.
Mm-hmm.
So you no need to worry about that ledger posting. Got
Okay.
it?
Yeah.
Yeah. Okay. Now see. Okay, ledger posting. What we do in ledger posting? In journal, what we do?
We
Record
write down. Yeah. Record.
transactions. Okay. It is a collection. In journal entry, we collect a transaction.
Yeah.
Collect
Yeah.
transactions. And in ledger posting, what we will do? We will segregate similar transactions and put in same nature of transaction. We will put in one designated place. So a ledger posting is a separate notebooks and the format we need to understand what is the format. So this area is for cash only. This highlighted part only for cash. This highlighted part is only for purchase. So I will be giving you some transactions. Please record those transactions. Okay.
Okay.
What will be the journal entry for the first transaction?
Wait, sorry, I'm still drawing the format. I
Yeah.
just wrote the transactions. I'm not drawing.
Okay.
So for the first one,
Yeah.
the thing to be cash and business.
No, cash and capital.
All right.
Yeah. Owner invested the money, na?
Yeah.
So business owe money to the owner, right?
So capital will be liability and cash will be asset.
Yeah. Capital is not capital, not a liability. Capital is another category. Capital only.
Right.
Internal liability, you can say.
Okay. So asset is gonna be debit and capital is gonna be credit.
Yes, good. So write down the entry. First line, cash account debit.
Yep. Cash account debit, dollar 10,000,
Mhm.
and then it will be capital account.
Next
Yeah.
line. In the next line, you will write, leave some space, then you will write
Yeah.
capital.
Yep. Okay, I'm done with the first one.
Hmm.
And then the narration will be commence business with
Yes.
cash.
Yes.
Okay, done.
Second transaction.
Yeah. Second one will be so me purchase and cash.
Good. Do the journal entry.
Yeah.
Done.
Yeah. So it's gonna be cash account debit
Mm-hmm.
of 2,000,
Mm-hmm.
and then it's gonna be sales.
Correct.
Basically space and then sales account credit 2,000. Yeah.
Correct. Do the next one. What is the next transaction?
The next one will be furniture and cash.
Yeah, okay, do it. So what is the entry?
It's gonna be uh furniture account debit
Furniture account debit.
1,000, and then it's gonna be cash account credit 1,000. Yeah.
So I have not written the narration. I have passed the journal entry. If you see the screen,
Yeah.
you also passed it in journal. I also passed here, right?
Yeah.
Now see, after doing this, this is the journal. Now see what we are supposed to do in ledger. So this is journal basically, right? In journal, we have passed journal entries. Now see, now these transactions which I have recorded in journal, now I am going to transfer from journal to the ledger. This is another notebook. And in this ledger, how many accounts I have opened? 1, 2, 3, 4, 5 accounts I have opened, right?
Yeah.
So now see how posting will take place. Now tell me in the first entry, which two items are there?
First one is cash and capital.
Yeah, so cash is debit now.
Mm-hmm.
Now this is debit side. See, this is the account. This highlighted part is debit side. Okay. Yes or not?
Mm-hmm.
And this one is highlighted part is which side?
This, wait, sorry. That one is flat.
This is which side?
Credit.
Credit, yes. Each account has, this is the account. It has two sides, from here to here debit and from here to here credit. Got it?
Yep.
And same thing will apply for other accounts also. Now see, in the entry, tell me cash debited or credited?
In the
Journal
first
entry.
entry,
In the first journal entry, cash debited or credited?
debit.
So debit side. This one is debit side now.
Yeah.
So debit side, I will write the money 10,000. And what is the opposite account to cash in the journal entry? Which is the opposite account?
Capital.
So in the detail column, I will write capital. And date column, I will put the date, Jan 1st.
But then isn't it the opposite though?
No, we are posting in cash account. So cash is debit now.
Yeah.
So take the debit.
Oh, okay.
Take the debit side. It is debit, so take the debit side. It is debit by how much money?
Sorry?
10,000. So
yeah,
that
10,000.
10,000 you will put here. And in detail column, always you will write the name of the opposite account. So here capital is the opposite to cash, right?
Yeah.
So we are done in a cash account. Now next account is which one?
Capital.
So capital is debit or credit?
Credit.
So credit side. See, this is the capital account, right? Can you see on the screen capital account?
Yeah.
So credit side here, this side I will take. And credited by how much money? 10,000. And name of the opposite account is which one?
Cash.
Jan 1st. Understood?
Yep.
Always we will write opposite name.
Okay.
Remember this. In capital account, I will never write capital. Remember this. In cash account, I will never write cash in detail column. Okay?
Okay.
So first entry is completely posted. So let me remove it. Completely posted. Or rather removing, let me highlight it. Highlight it, bold the text. Okay, which is the next entry? Read out.
Purchases account debit.
In cash credit, right?
Cash credit.
The
yes.
first posting I will do in the purchase account. Purchase account, this is the purchase account. First you need to locate the purchase account. This is the purchase account. Got it?
Yeah.
Debited now?
Yep.
So debit side, debited by how much money?
Debited by 5,000.
So put 5,000. Name of the opposite account what?
Cash.
So I will write cash. Date Jan 2nd. Now I will make posting in which account?
Cash.
Cash debited or credited?
Credit.
So cash account credit side. This is my cash account now?
Yeah.
It is credited, so credit side. Credited by how much money?
2,000. Oh, sorry, 5,000.
5,000. Name of the opposite account?
Purchases.
Yes, so I will write purchases. What is this? Cancel. Purchases. And date is Jan 2nd. Done? So done posting in cash account. Next entry, tell me what is the next entry?
The next one is cash account debit, sales credit.
So cash debit. So in the cash account, which side I will take?
The left hand side.
I don't know left hand side. I know only debit and credit.
Debit side.
Yeah. So this is debit side. Debited with how much money?
2,000.
2,000. Name of the opposite account?
Sales.
Sales. So, and date is Jan 3rd. So we are done posting in cash account, right? Now next account is which one?
Sales.
Debited or credited?
Credit.
Credit. So where is the sales account? I need to locate that. This is the sales account. Credited now?
Credited, yeah.
So credit side 2,000. Name of the opposite account?
Cash.
Cash. Date Jan 3rd. So posting done in sales account also. Which is the
Yeah.
next entry?
Furniture and cash. So it's gonna be furniture.
Furniture debited na?
Mm-hmm.
So where is my furniture account? This is my furniture account.
Yeah.
Debited with how much money?
2,000. No, sorry, 1,000.
So debit side I will write 1,000. Name of the other account?
Cash.
Cash. Date is Jan 4. So posting done in furniture account, right?
Yep.
Now I will do ledger posting in which account?
Cash.
Debited or credited?
Credit.
So cash account, this is my cash account, credit side $1,000. And name of the opposite account?
Furniture.
Yes. Furniture account. What is the date? Jan 4. So understood ledger posting,
Yep.
what we are to do?
So basically, we take
We take help from journal. If
yeah, we
any
take it from
account is
journal and
debited in journal, we will put in debit side. If the account is credited in journal, so posting will take place on the credit side. Agree?
yes.
So two thing understood. This is journal and this is ledger. We'll practice. You no need to worry. Okay, we'll practice enough. So everything will be in on your fingertips.
Mm-hmm.
You will be mastering in accounting.
Yep.
So I hope ledger posting is too easy.
Yep.
Yes or not?
Yeah, it's easy.
Yeah. Now see what is the use of ledger. I have transferred the journal entry from journal to ledger. That is known as posting. Posting is done now. What is the benefit? So now I am telling you what is the use of ledger. Okay. So the use of ledger will help us to find the important information quickly without wasting any time. Let's show me a demo. If suppose I want to know what is the cash available cash with me, how much cash do I have? Can you tell me how much cash left in the business? So if you
So
don't maintain, listen, if you don't maintain this ledger, what will happen? If you ask how much cash, so immediately you need to open the drawer shelf and you need to count the money available with you.
Yeah.
You need to count and then tell after counting only you will get to know how much cash is available.
Yeah.
Isn't it? And that is very time consuming task. Yes or not?
Yep.
But if you maintain ledger, so ledger will help you. You no need count the money. See, you want to know how much cash available, right? So in the ledger, go to the cash account, compare both the side. Debit side, what is the total?
Debit side, the total is 1,200. 12,000.
Credit side, what is the total?
6,000.
Now difference, do the difference, 12 minus 6. So 6,000 is the balance. You no need count the money. You just compare both the side.
Okay.
This is receipt
Mm-hmm.
and this is payment. Receipt means you are getting cash, right?
Yep.
Cash is increase in asset debit. So whatever amount we are writing on debit side, that is actually cash receipt.
Mm-hmm.
And when you make the payment, cash will increase or decrease?
Decrease.
When you make the payment, your cash will increase or decrease?
Decrease.
Yeah, decrease in asset, credit. So that's why whatever you are writing on credit side, that is basically payment.
Yeah.
Okay, receipt, you compare with payment, you will get to know the balance figure. How much cash do you have?
6,000.
Yeah, now you no need open the shelf and count the money.
Yeah.
That will take too much time. Immediately go to the ledger, locate the cash account and find out the difference of both the side. Debit side 12,000, credit side 6,000, 12 minus 6, remaining money is 6,000. Understood?
Mm-hmm.
This is the benefit of a ledger.
Yep.
Important information you will get quickly
Mhm.
without wasting any time. I hope understood.
Yep.
So today, tell me what we have learned.
We learned the ledger and we learned how to basically return. How
Return
to
part.
record
Today I have
return.
explained you purchase return and sales return, how to record.
Yes.
And then we have discussed what ledger posting. And I have explained you the benefit of ledger.
Yep.
Right?
Mm-hmm.